Now it's time for our Options Insight segment, which we do every day at this time. And joining us right now to talk a little bit more about what she's seen is Samantha LaDuc. She's the founder of LaDucTrading. And Samantha, everybody's talking about that big CPI report, but we forget there's another sort of big event potentially tomorrow, and that's when we learn who is going to be the next leader for the Bank of Japan. A big question as to how you trade around that announcement.
Absolutely. And CPI obviously is a little bit of an unknown. We've gotten some really solid reports for it to come in hot and a little bit weak, but that's very much, it can pass, if you will, as it relates to market direction for yen, gold, stocks, and bonds. It's very much focused on yields and dollars. So that's where I spend a lot of time. And Bank of Japan right now has my full focus. It has actually since October 21st, where it did a very massive yen intervention. And it wasn't the first one. They actually did a very big one back in September. It was the first big yen intervention in 24 years. It was September 22nd, then followed by 21st and of October, and then again October 24th. This kind of coordinated with a whole bunch of central bank intervention, if you will, of pause narrative, as well as SNB had a very large dollar swap, and the whole thing put a bid basically in yen, gold, stocks, and bonds. So tomorrow will be CPI, but I think Bank of Japan has already proven that it has a big influence over markets.
It certainly does, but we also have indication that the BOJ's next governor will likely be Ueda, who's a bit of an unknown. He had worked at the BOJ before, so the surprise is kind of out there already and maybe priced in. Talk about the implications for the yen at this point when it does become more official.
Well, right now, it's very clear that the Bank of Japan assets have been growing since September, and that's really the reason for the higher equities and yen and gold at the time. But they have since come under pressure with the dollar bounce. So I think that's really going to be the big watch. If we get over Dixie 104, we're going to have a lot more pressure in gold, which has basically been that follow-up trade that I did 6 weeks ago when I came on the show, and I said, okay, I can see this going up to about GLD 180. I had an options finance call spread. Then 3 weeks later came in and said, this is the pause. This is where now everyone's excited about higher yen. Likely we pull back, and gold pulls back to 174 GLD. It overreacted. Actually, it was a very strong sell-off on the news of the new Bank of Japan nominee, and we have continued to fall. So gold is actually still in descent, and dollar has continued to get bid. It looks very perky, technical term, for both yields and dollar, which will put more pressure on gold. So I think that right now it's very tightly correlated, gold with dollar and yen.
Yeah.
In the past, it's been, very inversely related to real yields. But I think of late, it's much more a dollar yen story, and risk premium, of course, tied to gold with geopolitical events. But I think for the market movement, we have some more pressure coming after the CPI and after the official announcement to gold on the downside.
What else do you sort of put into that basket as a potential trading opportunities, Samantha, particularly with the expectation of increased volatility surrounding some of these decisions?
Definitely, I see the Japanese inflation data as absolutely the eyes on the prize. Japan's wholesale prices in January rose 9.5%. Workers saw their biggest pay gain in a quarter century. And then, of course, core consumer inflation for Japan. I know we're talking about U.S. so much for tomorrow, but it hit 41-year high of 4% in December. So yield curve control is getting stressed over in Japan. And I think that's absolutely impacting U.S. yields and dollar. For the most part, gold is falling also because we're being paid to wait as it relates to cash, right? T-bills are earning a really nice return. So this is another reason where I think pressure will come in and gold will fall further.
All right, of course, keeping an eye right now. You're looking at spot gold still camped out right around 1851. And right now you got dollar yen camped out at 132.43. Samantha LaDuc over at LaDucTrading. And for our Options Insight segment today, a lot more coverage right here on Bloomberg as we count you down to the close.